I don't know that because GDR was pointing to a bit of a negative, start. However, the numbers are not too bad. It's actually quite a steady show. So I think a lot will depend on the market mood today. But just to run you through the numbers in terms of the key highlights, the NII was close to around 12,500 odd crores. Bang in line with our expectation. The pre-provisioning operating profit was a little higher versus than what we were expecting, and the profitability at 6,071 crore despite those AIF provisions was in line with the expectation. Now, in terms of the other details, the NIMs were a bit lower than what Street was expecting at 4.01%. But the compression was largely on expected lines in the sense that Street was expecting that there is going to be a bit of compression. As far as the brokerage action goes, we have seen a slight bit of cut in EPS, anywhere between 0.3 to 0.5%, so really minuscule, and that's because they have adjusted the numbers to the 9 months that have really gone by. Now, in terms of the outlook, the brokerages as well as the management believes they're on target to achieve that 1.8% return on asset. The ROEs have been over 18% for the last 5 to 6 quarters, and they are expecting that momentum also likely to continue. In terms of valuation as well, the stock is at around 1.8 times forward earnings on a price to book basis, and it's at a 20% discount to the likes of ICICI Bank, and hence that leaves that bit of room as well on the upside. But overall, it looks like it's a steady show, because even if you look at the loan growth, that's at 22% year on year. The deposit growth came in at 18% year on year, a 5% quarter-on-quarter improvement. But if you go by the management commentary, they do indicate that there is some challenge as far as deposit is concerned, and that the entire industry loan outlook is expected to moderate a bit. But that's something that we already know. Nikunj, how do you think the Street will react to Axis Bank's numbers today?
See, everybody is comparing all banking numbers with the prism of HDFC Bank. That really becomes the filter. So on that filter, if I look at Axis Bank, the filter is telling you that Axis Bank has done better. That's one simple thing. Second, the bank or the stock in this case is not very expensive. That also I think is something which we need to flag off. And see, in general, you are getting a sense that the book quality, which has been very volatile for HDFC Bank, for Axis Bank, I beg your pardon, and for Axis Bank, I think it is getting better. The ROE and ROA, the ratios are also coming under better. So I don't expect actually a meaningful reaction per se, Anisha, in the numbers per se. I think it would be at best a reaction. These numbers do not warrant a bout of short covering. Similarly, these numbers do not warrant any kind of a downgrade. It has been a ranked outperformer in last 1 year. I think that ranked outperformance will continue. What I don't like about that number, Anisha, is the fact that there is a hint of NPAs or pre-provisioning going higher. That is the drag which in a sense got IndusInd Bank lower. Is this beginning of any kind of a turn for Axis Bank? Too early to say that, but yeah, that for me now becomes this red line, or you want to underline this factor in terms of the quarterly profile. So these numbers in my book after the recent price action do not warrant a downside, which is significant, and they do not warrant upside, which could be significant.